I am going all in. Let's talk about what's going on in the market right now. We got a big weekly report to talk about. Hey, if you didn't check out the last podcast that I did, make sure you check that out as well. It was a great one. Had a big fun conversation with Cade. Talked about crypto, his journey in trading. Tomorrow we'll have another podcast out with one of the Discord traders. He's an options trader. We get really deep in the deets. So if you're wanting to learn about options trading from the seller side, because he's more of a seller than a buyer, and how to set up those trades, the risks involved, and how to get out of losing trades when you're an option seller, all of that. We covered all of it in a 2-hour podcast. You're going to love it. That's going to come out tomorrow. But today we got to talk about what's going on in the market and why I'm all in. And probably going to pay for it. I hope everyone's been having a fun week, had a great holiday yesterday, because there's nothing else going on, especially in this market. The S&P has basically been range bound. We've been inside the ranges, no new highs, really no closing at new highs. We've had intraday new high come around. However, this market still seems like it doesn't know what to do. And I am short. I've been talking about this a lot. I'm seeing this as a potential double top for the S&P. I would like to see this market pull back. And I also want to kind of cover what is going on in this market. What are the two main conversations going on? Why is the market seem so indecisive? And I've been thinking about this, and I think it basically boils down to one of two things. Because I was thinking maybe it has to do with the bond market. Maybe it has to do with what's going on in the banks. Maybe it has to do with whether or not there's a recession. But you know what? I think the real conversation right now is, do you believe that AI is here and it is now, and it will drive technology, and it will develop so fast that it will rip people's faces off, that it will completely make up for the lack of productivity, that it won't even matter there's a recession because one person will do the job of 50 people, and so you don't even need that, and you're going to need so many chips within the next week. Like, you better get those chips right now because this is here and it's so either you're in that camp and you're crazy bullish and you see NVIDIA trading at .com bubble levels of valuation and you say, it's still not enough. Or you're like, okay, this seems like a very overextended market. I really don't want to be long here, even in companies I really love. I look at NVIDIA, I like NVIDIA, I look at Facebook. You know, Meta's been doing some really cool things. They just did their own version of Twitter that they're trying to incorporate. That seems like a pretty bullish thing that they've got going for them. They've got their own AI they've been going out. They've been making some, I think, some interesting moves. They're also in the spotlight because of the potential fight with Elon. And then we got to talk about Tesla. Tesla looks like they're setting up pretty well. You know, they've got robotics and stuff. It's interesting to see if all this AI innovations bring self-driving around, because then you can start to look at Tesla's price and say, okay, this is starting to make more sense because now you have fully automated driving. People can literally make money off their car while they're sitting in the office because they can just go Uber people around. It can't DoorDash. Or could it? I don't know. I don't think, I mean, a whole different conversation. And so the big conversation is this too soon? Is this another .com experience, another crypto experience where the hype is here a full decade? Or I think in this case, even the people who are bearish in this case are thinking 3 years, 5 years too soon, and that people need to tamper back their expectations. Or on this upcoming quarter, because remember, the next round of earnings is literally a week away. On this next round of earnings, are we going to see that the big wave of AI is here, and companies are already racing to buy these chips because they need it, because the tech is already here, and the innovations are all exploding, and who knows what the next ChatGPT is. Maybe it's 10, 15, 20 times better than the other ChatGPT. Maybe it's already to the point where it can make its own ChatGPT. We don't know. And I've heard also lots of people say that ChatGPT isn't even the best, and that some venture capitalists are actually looking at different variations of ChatGPT that are offered by Google or other smaller companies that we haven't even heard of yet because they don't do as good marketing as OpenAI. But they've been using the free internet to collect all this data and build their models as well. And we also don't even know how many parameters are built into OpenAI's, ChatGPT. So maybe that's even on the lower end of what's possible. Hey, there's just if you're getting the point, hopefully you're getting the point right now. There's so many possibilities that it's leaving a lot of speculation in the market, because there is a case to be made that this technology is so revolutionary and it's going to require so much demand and increased productivity that there won't be a recession. And if there was going to be a recession, they just got bailed out. The Fed got bailed out. Everyone's getting bailed out because of this. But that begs the question of, will that bring inflation back if there's no actual pullback? Will it actually get rid of the wealth effect and keep the inflation away? Or is inflation going to come back roaring next year? There's a lot to think about in the long term, if they're even right. I don't think we're out of all the dangers, right? But I still stay in the camp. This is a bit too soon. This market's a bit too overbought, because if you just look at these prices, no reasonable fund manager is going to step into a market like this and say, oh yeah, oh no, this is a great price for NVIDIA. Let's hold this for 5 years at this current price. This is excellent at $400 with the stock up over 100% year to date. That's when I want to get in. I don't want to look for a pullback here. I mean, it's pretty crazy, right? And I know the stock probably by the end of the year could hit $500, but if you don't think there's going to be a pullback here, I mean, just look at the TTM squeeze here. The momentum is not there to drive this stock higher. Everything seems to be stagnating. And especially, if we look at AMD, we're seeing the same effect, right? These stocks are starting to slow down precipitously. The TTM squeeze on AMD looks even worse. It looks like we're about to come down, make a new low here for AMD. However, there's still lots of smaller companies if you're looking at for opportunities. If we look at IWM or a bunch of the mid cap stocks, a lot of this looks a lot better and a lot more appealing. These look like they're pretty undervalued, and within this sector, I'm seeing a lot of the bank stocks. We've talked about that a lot. A lot of this is a refresher from previous reports, and I just want to reiterate that I love being short right now. I don't want to get too repetitive, but I think this is a double top. I think that the AI is overhyped, but if you disagree with that, I don't judge you for it. Really don't. I don't think it's a ridiculous thing to think. I don't think that it's insanely far-fetched, and I could be wrong here. And in fact, I have tight stops in all my positions right now. If this market shoves to a new high, it could go to 460 before we see another chance for a pullback, or maybe 450. I would go 450, then 460, and then I'm going to have to wait for confirmation for this to actually turn over. Now, with the way the market is, there's no one hedged right now. And usually when there's no one hedged, that's when you actually have crash risk. So I'm not saying that I think that the market is going to crash. I'm just going to say that when everyone's hedged, markets tend to not melt down. When no one's hedged, that tends to be when the pain comes. And I think a downside move here could leave a lot of people panicking out pretty rapidly, especially since a lot of the big money and smart money is not even in these tech stocks. They got out. Maybe they even missed the moves. They're feeling bad about it. But we've already been seeing within the market, if I even just look at my watch list, I could see the rotation that is occurring right now from growth to value names. So I think you really got to be watching what's going on within the sectors as well to really get a good grasp of what's going on. And to be honest, that's a bit of worry for me right now, given my positioning. I'm willing to pivot in a heartbeat if I see some confirmations that this could go higher, and then to pivot and chase this a little bit cautiously, very small. I'm fine to go with some pretty sizable positions here to the downside with where everything's at. But if I continue to see that the tech companies that brought about this rally to these evaluations on the S&P continue to stagnate or kind of melt down. We've seen NVIDIA pull back. We've seen Tesla pull back. We're seeing Apple pull back from its highs. If we continue to see that they just become more stagnant, not get downside, but we do see a broadening out of the market, and some of these value names start to pick up, other names within the S&P start to gain some bids, and those start to be more broadly uplifted in the market, then the breadth in the market starts improving, and then it could go even higher. Maybe we get a rally up until the end of the year, and this becomes a crazy bull market that then can carry itself over into the AI. I think it's a pretty far-fetched narrative. It doesn't really make sense to me fundamentally with everything else that's going on, because I don't think the banking issues are done yet. I think the Fed's going to tighten 2 more times, and I think that could easily cause more issues. But I mean, if you think about this in the idea, and here's my big mistake year to date, is I should have seen what the Fed did after SVB, Silicon Valley Bank blow up, as pushing more liquidity into the market. Because this market for a while now has not been trading fundamentally, right? These stocks aren't going up to all-time new highs because sales are better than ever and everything's amazing. That's not what's happening. What's happening is that these stocks are going up purely as a reaction to the Fed creating more liquidity in the markets. And that's what happened during COVID. That's what's happening again. It's just all being fed from the printer. If you really want to simplify it, that's exactly what's going on. None of this has to do with any of the fundamentals of the macroeconomics or anything. It's just like the Fed created more liquidity when they saved Silicon Valley Bank, and the market has reacted to that, even though that we're still tightening in this current market environment. So, that was my big mistake, is not correctly evaluating what happened there. And now we're at new highs because more liquidity exists. And if we see an evaporation of that liquidity, this market will pull right back. So that's going to be it for this week's report, though. Those are my thoughts right now. Not a lot of charts, not a lot of news, but there is some stuff going on. I got to work on some shorts. I got to edit a podcast that's coming out tomorrow. Make sure you don't miss that. You're going to love it. Make sure you watch the podcast. It's already out. And then next week, we also got another podcast. We are gearing up for a content train, and I'm super pumped here for it. Just get ready. It's going to be great. We also have some awesome guests coming on later this month. Get excited.